The ECB lowered the deposit rate by a further 25 basis points on its October meeting. Now, this decision, of course, is based on an updated assessment of the inflation outlook. Just quickly, let's hear in from the conference.
The Governing Council today decided to lower the three key ECB interest rates by 25 basis points. In particular, the decision to lower the deposit facility rate, the rate through which we steer the monetary policy stance, is based on our updated state assessment of the inflation outlook, the dynamics of underlying inflation, and the strength of monetary policy transmission. The incoming information on inflation shows that the disinflationary process is well on track. The inflation outlook is also affected by recent downside surprises in indicators of economic activity. Meanwhile, financing conditions remain restrictive. Inflation is expected to rise in the coming months before declining to target in the course of next year.
All right, now Peter Cardillo, the Chief Market Economist at Spartan Capital Securities, is joining in from New York. Hi, Peter. Thank you very much for joining in. Peter, the ECB, of course, cutting interest rates, on the back of inflation really cooling. Give us an overall overview of what's happening.
Yeah, well, look, the ECB followed some of the other central banks this week. We saw the Thai central bank cut interest rates, and it now appears that New Zealand is ready to cut, and probably Australia. So, here in the States, we are expecting more rate cuts, however, perhaps somewhat more trimmed as previously thought. But the good news is that the cost of money is coming down. And of course, it's coming down because inflation is beginning to hit some of the central bank's target. In fact, we saw that with inflation in Great Britain this week, where it went below the central bank's target. And so that opens more rate cuts in Great Britain. And so, today's action by the ECB is a confirmation that inflation is going low. Of course, yes, Lagarde warned that perhaps inflation could go back up a little bit before it goes down to the target, or perhaps even go lower than the European Central Bank's target. So it's all about inflation moving in the right direction.
Peter, just a quick word on the US weekly jobless claims that, seem to have unexpectedly fallen. What's your sense on that?
Can you repeat that, please?
I was asking you about the US weekly jobless data that's just come in.
Yes, of course. Yes.
Give us your overall sense on that, and how are we going to see the markets reacting?
Yeah, well, the jobless claims today was a little bit murky in the sense that you saw a drop in weekly claims, but we saw in continuous claims that they actually went up by 9,000. But I think that is hard to really pinpoint for any one particular reason, and it might be skewed because of the latest hurricanes that we had. But I think what one needs to focus is the retail sales data, which came in stronger than expected. And it shows that the American consumer is resilient, and that the consumer remains the backbone of economic growth. And so that number to me suggests that the Fed has achieved a soft landing. And that's good news in terms of the markets and in terms of future corporate earnings.